All right, now we're going to continue our lesson with PQ2-7. So using the analysis you developed in question 6, which we did the past video, record the business activities repeated below using the basic accounting equation. The chart is provided below. Ensure that the totals at the bottom of the chart equal. So question number 1. The owner invested $750 of cash into a business. Remember, we have 5 main accounts in accounting. We have assets, liabilities, equity, revenue, and expense. Cash is an asset, so assets going to go up by $750. And since the owner invested money into the business, that's going to be owner's capital, which is part of shareholders' equity. So shareholders' equity is going to be $750 as well. Transaction number 2. Borrow $500 from your parents to help start the business. Remember, break the question down. We borrow $500. This is focused on that first. So when we borrow money, cash is going to go up. Cash is an asset, so we're going to increase asset. And since we borrow money from our parents, we're going to have to owe them back in the future, which is a future obligation, which is a liability. That fits the definition of a liability. So once again, these over here are very important. Let me just copy and paste it for you guys in this question over here, so that way we can visualize it a little bit better. Okay. Okay, now the next one is number 3. So using a credit card, let's stop right there. We know that a credit card is a liability because we have to pay it off in the future. So our liability is going to increase by $60. So, using a credit card registered a business name with Service Ontario, we know that a business name is an asset because it provides us with a future benefit. So, our asset is also going to be increased by $60. Number 4 now, purchase supplies will be used in the future for $250. Using a credit card, you will not have to pay off the credit card until next month. Once again, supplies is an asset, it's a future benefit, and supplies is increasing, so $250. We used our credit card. Once again, our credit card is a liability. It's a future obligation. So our liability is also going to increase. Number 5 is paid cash for 500 business cards from Staples for $49.99 plus HST. Remember, HST is 13%. So we're going to simply take the $49.99 times by 1 plus the tax rate. That's the formula. Arrive at 56.4887. Let's round it up to 2 decimal places. So that'll be 56.49. So we paid cash. So cash is going to go down by 56.49. But now we also bought business cards. So business cards is going to increase. So that's also an asset because that's a future benefit. As you can see, these two offset one another and the counting equation still balances. It balances over here. 750 equals 0 plus 750. Balances over here. 500 equals 500 plus 0. 60 equals 60 plus 0. 250 equals 250 plus 0. In this case, it balances each other out. 0 equals 0 plus 0. Once again, the counting equation must always balance. Number 6 is receive cash from customers for services provided, $14.50. Assets is going to go up by $14.50. And since revenue is part of equity, revenue increases equity, that's going to go strictly into equity by $14.50. Number 7 is used up half the business cards during the local Buster Fest in Port Credit, Mississauga. So we used up half of our business cards. So we're going to take this and divide it by 2. And let's change this into, once again, to do that to 2 decimal places. And since this is an expense to us, since we use something up or we consume something, our equity is also going to go down by the exact same number. And now for 8, we pay dividends of $300 to the owner. So the business essentially paid out $300 in cash. Cash is an asset, so asset's going to go down. And since we paid out dividends, dividends impacts equity directly. So we're going to reduce equity by $300. And to do a quick review, remember, equity is a product of owner's capital plus retained earnings, and retained earnings is a product of profit minus dividends. So dividends reduces retained earnings. Now at the end, we're going to calculate the totals. So we're going to simply put in a formula to sum all these together. So 750 plus 500 plus 60 plus 250 minus 56.49 plus 56.49 plus 1450 minus 28.24 minus 300. I'll put in a quick formula for this. Then for liability as well, 500 plus 60 plus 250. I'm going to put in a quick formula again. Then for equity, we're going to do 750 plus 1450 minus 28.24 minus 300. Another quick formula. And if we do this calculation separately, this should equal total assets. So this is how the account equation will balance.